So welcome everyone to today's webinar. It's wonderful to bring the Concordia community together for an important conversation on the challenges facing the global economy and recent developments in the United States and China. Certainly a very timely issue. At the Concordia Annual Summit last month, we hosted a number of conversations on the future of global trade, manufacturing, and supply chains. One of the primary takeaways was that the boundaries that previously existed between tech, security, and trade issues are frankly no longer there. This has profound implications for the global economy and businesses around the world, especially in the age of COVID-19 and rising US-China tensions. As leaders think about how to navigate the volatility of this environment, it's crucial to understand what is really going on in the China market, how companies are adapting to those developments, and strategizing for a post-pandemic future. I'm especially honored to be joined by Bill Zarit this morning. Bill is the Senior Advisor to Concordia and has been invaluable in supporting Concordia's mission of strengthening cross-sector collaboration, building partnerships for social impact, and fostering a community to better the world. The majority of his time and attention is focused on his work as Senior Counselor at the Cohen Group, where he advises multinationals working in the Chinese commercial market. I can think of no one better suited to moderate this important discussion. And Bill, thank you so much for all of your friendship to Concordia. He has assembled a remarkable panel of business leaders based in Beijing who represent some of the largest American companies in the world. I want to extend a warm welcome to our panelists, Gilligan, Gloria Xu, Brent A, Fernando Vallina, and Albert Z from AmCham China, and thank them for joining us today. On behalf of the Concordia team, we're thrilled to have you all here. And before I pass it to Bill, just a few quick housekeeping notes. Please do feel free to ask a question in the chat function at any time during the webinar. The panel will be monitoring the comments and questions you send in throughout the entire conversation. And with that, Bill, I turn it over to you.
Great. Thank you, Matt. And thank you for the good work that you do, bringing people together and promoting partnerships. It seems like it's more relevant now than ever.
Absolutely. As
Matt said, I'm Bill Zarit, and I am a vice chair also of AmCham China. It's no secret, and it may be duplicative, but I'll say it anyway. We're experiencing the worst bilateral relationship, US and China, that we've experienced in probably 45 years. There's so much bad information, misinformation, biased information, and lack of information. And this was really the genesis for this program. We have access to speak directly to people who are on the ground, business people working with American companies that will be able to share their point of view. And I think it's a rare point of view that we're going to experience. I want to thank the outstanding panelists. Matt said it well, the remarkable panelists. The bios are included in the information that you've all seen, so I'm not going to go over those now. I just want to quickly introduce each person and give the company affiliation. Greg Gilligan is the current chair of American Chamber of Commerce in China, vice president of the PGA Tour in Greater China. Now, in a moment, Greg will give an overview of what is AmCham China, or the American Chamber of Commerce in China, and what we do. Gloria Xu, AmCham China vice chair as well, and Public and Government Affairs General Manager, Greater China Dow Chemical. Fernando Vallina, who I understand is a Real Madrid fan. We won't hold that against him.
It's
chairman.
sad truth today. We lost yesterday, as I told you.
I'm so sorry. Chairman ExxonMobil China Investment Company, and Fernando is a member of the AmCham China board. Albert Xie, who we will not be seeing, but we will be hearing from today, is Vice President, Public Affairs and Government Relations, GM China, and an AmCham China board member, and Brent Young, Vice President and General Manager, China Corporate Strategy, Intel Corporation, and a board member. So to get things rolling, Greg, could you briefly introduce AmCham China for us?
Certainly. Thank you, Bill, and everyone for bringing us together. Bill, let me just do a quick audio check to make sure that things are working properly. Okay, good. Thank you. So AmCham China is a membership organization of close to 1,000 member companies, and active in the membership are probably about 4,000 individuals. I dare say that we are one of the most active and influential chambers of commerce outside of the United States. The U.S. Chamber of Commerce does a pretty respectable job, so I want to, kind of differentiate between domestic U.S. and internationally. But internationally, I think we carry our weight pretty well. And what we do is we advocate and we network and we provide information and analysis to our member companies. And we also try to foster as much community as we have the opportunity to support each other. Now, having said that, I want to make the point that most of our members, including the senior executives, are not necessarily Americans. In fact, the majority of them are Chinese executives. We have two on the call with us today, Albert and Gloria, both of whom are extremely talented, successful people that work to the benefit of their American company employers, but in the context of serving Chinese society, the China market, et cetera. So what we do, I would say, particularly in times like we have now, is to really ramp up our efforts at policy interpretation and sharing information with our members, and also advocacy and access to decision makers, in this case, mostly on the parts of the United States government and the China government, which we often abbreviate as USG and CNG. And so because of the trade conflict and then a global pandemic, we find ourselves ever closer to these groups of decision makers than even previously. We've always had good working relationships, but the dire circumstances of the last few years have actually made us more important, more relevant, and frankly, more connected than ever. So trying to balance, a day job and then all these AmCham responsibilities is difficult for each of us. I think it's important to note also that everyone on this call, including Bill, who neglected to mention, he is also a chairman emeritus, having preceded my predecessor in the chair, and currently serving as vice chair, as he mentioned, along with Gloria and me and the rest of the board members that are here on the call. But we're volunteers. We don't get any compensation or anything from this. We're just committed to trying to bring the two sides together. Now, having said that, I guess I'll leave with two last comments because I know I want to be careful of time. And that is that we try to advocate down the middle. We try to stay objective and fact-based. So we do a lot of surveying of our membership, and then we reflect whatever it says. Sometimes we make USG happy when we reflect it. Sometimes we make CNG happy or unhappy. It goes both ways because we're down the middle and we just try to stay objective. Now, having said that, I would also say for the second point is we feel that there's a time lag, like a time warp between our experience in China working for US business and how US business in China is perceived back home in the United States. So the time warp isn't just the time lag or jet lag of 13, 14 hours. It's actually a matter of years. So we often, and every year we go to DC and we're on the Hill and we're at the administration and we go to all the policy community, and we express, what it is we're experiencing. And we always find that where they are is generally 2, 3, 4 years or more back in time, because frankly, we just are here more often, we live here, and so on and so forth. So this year is particularly challenging given the level of tension that we all have. I have plenty to share about that, but I want to be, one, conscientious of time, and two, reactive to what you're interested to talk about. So whether it's our moderator, Chairman Zarit, that's going to guide us, or whether it's responding to your questions, I'll reserve further comment until you prompt me in that way. Thank you, Bill.
Thanks, Greg. Very, very well put. I like the time lag concept. It's very accurate. Listen, what I'm going to do is to be asking each of you to share your thoughts on the business climate, special challenges you face in your respective industries, and where you see the markets trending. But first, to help get you all warmed up, I'm going to ask each of you a question. It'll be the same question, and you have 30 to 60 seconds to respond. So let's be sure that we get within 60 seconds, or you're going to hear the gong. So the question is, what is your single biggest worry right now? And Brent, please keep it to business concerns. If it's a personal problem, maybe we'll have a panel later where we can go into your issues. But for business, what's your biggest single worry right now in terms of business? Brent?
Yeah, we would need a lot of panels to handle the personal concerns. So business concern, I mean, first and foremost is people's safety. Seriously, employees in the company, partners, and customers, et cetera. I mean, that is first and foremost of a biggest concern. Second is just getting back on track. I mean, the world had a great engine where you had a lot of gears connecting, and that's kind of not the case right now. And so once we've all got the kind of safety situation figured out and stable, and everybody is protected, then it's getting those economic gears back together, and they can start really driving the world back to some sort of new normal.
Got it. Albert, welcome. What's your biggest worry right now?
Can you hear me okay?
Yes, sir.
Thank you. The biggest concern for automobile industry is, you probably know that in China, with this pandemic impacting all the industries, and all the industry have suffered and experienced a decline. But auto industry, since June this year, we have seen growth. And the number from September is the automobile industry has increased 12% compared with the same time last year. So it's growing. And our biggest concern is how long and this growth could last. That is probably the biggest concern our company is, because we are adjusting our government pushing for electrical vehicle, for infrastructure, and all the things. We want to know how long this growth could last, period.
Got it. Fernando, ExxonMobil, what's your biggest worry?
So I cannot talk about football, you told me before, right?
That's exactly right.
Okay, well, if you stick to the energy world, oil and gas products and derivatives, I think probably at the highest level right now, the biggest challenge is to focus on how do you balance managing the current situation, which has a very significant demand drop in our products, particularly in energy. How do you do that without compromising your future? So obviously today we need to manage cash. If you look at oil and gas demand, oil went down 20% in April compared to the prior peak in December. We talked about automotive, and Albert gave us some shining lights in there, but At the same period in time, automotive production, which drives petrochemicals, plastics, lubricants to a large extent, was down 60% versus the same month the prior year. Jet fuel for aviation, 70% down during the same process. So obviously, you need to manage cash. You do that by finding efficiencies in your day-to-day operations. At the same time, you need to look at your investments. How do you stage your projects and the expenses associated with them? And you need to do that in a way that doesn't, again, compromise your future. We would like to delay but not cancel, and like to offset the extra expenses associated with these delays so that you preserve the value of these investments. So again, managing the day-to-day so that you're able to keep on running your operations efficiently in this environment, but preserving the value of your investments for the future is probably the most difficult task that we have ahead of us right now.
That's a terrific answer, but I'm taking 40 seconds off of your next session.
And if you ask me about football, you will need to take away half an hour.
Gloria Xu with Dow Chemical.
Well, actually, if you look at the time I spend on the issues, they probably spend most of my time on one issue, which is sustainability. Plastics policy and the carbon emission goals, because the business has been doing pretty well even during the COVID, Q1 and Q2 in China, and we have already kind of returned to pre-COVID levels. But however, there has been an avalanche of new regulations in the plastics, sustainability, especially the carbon after President Xi announced his 2060 carbon neutrality goal. So we are spending a lot of time trying to understand what the short-term and the long-term impact of those policies on us as an industry, and of course as a company.
Great, thank you. Chairman Gilligan, what's your biggest worry right now?
Well, from the standpoint of my industry, it would be interconnectivity, but basically meaning transportation. So global transportation, as we all know, the mobility of people to move around the world is highly compromised. And when you run a global sports enterprise that can be quite impactful and crippling in some circumstances. But I can't get away from something similar to what Albert reflected, which is to say that global economic concerns. I think we all have a lot of confidence in the long term of the United States economy, but in short term, I frankly am concerned. And then because of the size of the trade relationship between the US and China, if the US economy is impacted, so will be the Chinese economy, the global economy, particularly as to the demand side in China. So any economic disruption that we have is going to be a business disruption. And I expect it to be volatile for the next couple of years.
Thanks, Greg. So now let's get into a little more detail, a little deeper dive here. We're going to take some time and I'm going to ask you to share what you think may be the most valuable for our audience from your respective points of view. So I'll ask each of you individually, and please stick to about 5 minutes in your responses. First, let me start with Fernando. You've been with ExxonMobil for over 30 years, so you're an expert on the petrochemical industry worldwide, and especially in the Asia Pacific. Do you see the energy / petrochemical industries recovering? And if you do, what is your take on the health of the industry in China? You're on mute. You're on mute.
My apologies. The answer is yes. I'll expand a bit more and I'll try to make it in less than 5 minutes to compensate. But when you read the news, when you talk to people around, there are some who believe that the dramatic drop that I was talking about in demand in the energy industry, the oil and gas industry, which came as a result of COVID-19, is actually reflecting and accelerating change in the energy mix, decarbonization, and the industry will not recover. But when we look at the facts, when we look at the data, when we look at the analysis from third-party experts, including the International Energy Association, we come to a different conclusion. And it's quite simple. The drivers for energy tend to be around the growth of population, but mainly getting out of poverty, increasing the standard of living, growing middle class. Some other trends like urbanization also play an important role. And those trends haven't changed because of COVID-19. The rate and pace may change as a result of it, but not the fundamentals in the industry. Again, it's quite simple. Higher standard of living usually always results actually in additional consumption of energy. And it's very difficult to meet the demands of this growing population where 85% of the population in the world today lives outside of OECD countries, and with a GDP that is 25% of the other 15%. That is a source of future demand for energy that needs to be met. And even with decarbonization in the long term, even when the world moves and will move to sources of energy with lower carbon footprint, there is still a role for oil and gas in there for many, many years. You look at the mix in the energy today, oil and gas is about 60% of the global pie. If you look at the projection for 2040 from the International Energy Association, is still anything between 46 and 53%, depending on the scenarios that you look at there, on a bigger pie, because in the meanwhile, the energy consumption keeps on growing on a global basis. So yes, there is a role for oil and gas for the foreseeable future. There is growth in our industry, there is recovery, there is little question in my mind about it. It just takes a very long time in a system as enormous as the energy system globally to transition from one form of energy to another. And it took 100 years for oil to overtake coal. I'm not saying it will take 100 years for other sources of energy, but it will take a very long time. And if you look at other businesses that we participate in, again, petrochemicals, for example, the drivers are very similar. The growth is actually above the growth of GDP. So we do foresee a recovery, and we do foresee the business to continue to grow over the next many years, actually, the foreseeable future.
Okay. Yeah, I'll give you maybe a minute later because you're under your time. That's great, but that's very helpful. And it's very important for us to keep that in mind with all of the calls for green technology, which of course we want to encourage, but it's not going to be a binary decision anytime in our lifetimes anyway.
No, the risk of climate change are certain. They are there. The world is moving in a certain direction when it comes to renewable energies, and those will be needed. But oil and gas will need to be a piece of the puzzle for many, many years.
Yeah. Thank you. Gloria.
Yep.
Born in China, you grew up in China. You have worked in a few different industries. You were a correspondent, a political correspondent with a newspaper. You were in the public relations. You have been in the banking industry, and now, of course, with Dow Chemical. And for everyone out there, Gloria is one of the most respected people, practitioners of government affairs in China. We know the chemical industry serves a broad range of downstream industries, and therefore it provides an early indicator for the economy writ large. What are you seeing now in the Chinese economy, and where do you see it headed?
Okay. Thank you, Bill, for the question. Actually, I kind of talked a little bit at the beginning of this panel that we have seen our business fully return to the pre-COVID level But that actually probably is a kind of down description of what we kind of experienced since the beginning of this year. So back in first quarter, we saw a little bit, a little downturn, but the recovery was very fast in the second quarter. If you look at our business results, our volume actually grew 11% in the second quarter compared with the same period last year. What we saw at the time was that automobile was still a little bit weak, but however, consumer-related goods, especially appliances, construction, home kind of DIY-related construction materials, as well as because we sell to segments like kind of washing, detergents, hand sanitizers. Those were very, very strong. And also, one thing was particularly worth mentioning was industrial coating, which basically is products that we sell to machinery. Those were very strong. Those were actually indicators that construction will be coming back in the rest of the year, and we clearly now see it now in the third quarter. And what we saw in the first and the second quarter were also consumption related to home decoration grew very fast. However, because people were social distancing, were working from home, were wearing masks, so cosmetics related applications were very weak, and that remained very weak. So so what I'm trying to tell every lady in my office is that even if you are doing the Zoom meetings, please do wear lipstick. Yeah, as Albert mentioned, automobile is coming back very, very strongly. And we also have seen picking up this quarter is furniture and also 5G related electronics kind of applications. The new iPhones, the new Samsung phones, those phones actually will be bringing more sales for us. Yeah. So overall speaking, the growth or the rebound is felt across the board. And now we are watching very carefully, of course, if that kind of growth or rebound is going to be sustainable, because now we are talking about probably a second wave in Europe and the US markets, and some of our customers are going to export their products to these markets. So if they're going to be a kind of second wave dip, we do not know yet, but we are watching very carefully. But for the overall China market, it's still quite stable.
Are you expecting a second wave in China?
And personally, I'm not kind of worried about that. We experienced several minor outbreaks in different cities. Beijing had one back in June, and there was a recent one in Qingdao, and the government was able to bring that down under control very quickly. And there seems to be now a very mature model for the government to identify the kind of small scale outbreak and react quickly, and the people have been very cooperative. So although now winter is coming, I do not feel that I need to worry too much as long as I keep wearing masks in public spaces.
So our Chinese friends and our foreign friends in China wear masks. Is that true?
Yes.
Good. Enough said. Let me move on to Greg. Now, Greg, you have done a number of interesting things in your career. You led corporate affairs for McDonald's in China for a number of years. You were in charge of a Washington-based advisory firm's operations. You now headed up the PGA Tour for 6 or 7 years. For those listening, Greg has lived in China for 25 years. Of course, it's not as long as Gloria, but we understand it's a different situation. Gloria wasn't born in New Jersey like Greg was. But so Greg...
Gloria turned 26 last week.
Something like that.
Yeah, I was about to say that.
But Greg has lived in China for 25 years, and I must say that he's one of the top Chinese-speaking foreigners on the globe. So he has a great insight, and in this position as chair of AmCham China, he has a really good opportunity to speak with a lot of Chinese officials, Chinese business leaders, as well as American business leaders and government officials over a broad range of topics. So Greg, if you would briefly share with us what you're hearing, what you're seeing about the direction of the Chinese economy.
Sure, Bill, I'd be happy to. And may I suggest, while I do so, you take a peek in the Q&A chat box. And so, as we all have read, the recovery here in China has been pretty robust and pretty successful so far. Now, I know there's always debate about the quality of China's statistics and numbers, but you know, taking that, if you take it at face value or you apply the standard discounts in whatever way that you've devised is prudent, you still get to the result that China has done a very good job of standing the economy back up. And in doing so, their main driver was simply controlling the virus and allowing people to leave the house and feel safe enough to go out and pursue economic activity and daily life. Now, if you take that and you, I think the recent numbers reported were 4.9% growth in the recent quarter. And there are those that are projecting maybe a 2% growth for the year. So having taken the COVID impact and everything and factoring it in, I would say, it may be possible that go higher than 2%. But one thing I did want to call out to people is that China measures GDP growth differently than does the rest of the world, or at least much of the rest of the world, which is to say that they will also take government-led investment and put that into the numbers. Whereas in many other places, the measurements are mostly based on things that are additive to previous baseline numbers. There's some pretty good explanations of this elsewhere, but it is worth thinking about. So in other words, if China wanted higher growth, or if they felt they had enough growth, they can just sort of back off, the money spigot. If they say, hey, we're not hitting our targets and we promised, X, well, then they just, build 10 more airports or do whatever it takes to make up the gap. Now, a lot of that is good and has driven the economy for many, many years. But as we know, the return on investment in that in recent years has started to flag. And so China needs new drivers of the economy. One of the new drivers we hear a lot about recently, and it confuses most everyone, is the idea of dual circulation. That's a, sort of typically esoteric, get your head around this socialist market economy kind of term. And part of it really is to say that China wants to be more self-reliant on the domestic economy and drive more consumer activity as a driver of the economy. When you look at the US, that has maybe 70% of economic activity is at the consumer level, whereas in China, I think it's a wee bit above 50. But that's quite a bit along from what it used to be, where I remember in our last epidemic of SARS, 2003, the contribution from the consumer was 30-some% in China. So it's come a very long way, and China has means, or at least the goals, to drive it further. The other part of this dual circulation idea really is more about trying to drive the economy and be less reliant on foreign technology. So one is sort of a national security concern of being less reliant on others. The other is trying to move up higher on the value chain in, you know, high-end manufacturing, et cetera. So I'll say that, you know, there is a lot of reason to believe why the Chinese economy's progress of late should be taken very seriously, and frankly, as a model of what many of the rest of the world could do if and when they really get control measures of COVID-19. I noticed, I'll just jump ahead a little bit, Bill. I noticed one of the questions around supply chain, and I will answer if and when you prompt me or one of our other members of the board here in that regard. But I do want to say one thing is that the idea that people are fleeing en masse and have decided they're going to pull up and, you know, move their supply chains and such is wildly overstated and reported simply because it's frankly sensational and it's what people want to talk about, and they would love the controversy that would go along with a resounding yes as an answer. But that's not the data we get when we survey our members. So the final statement of that is, I think that people were very scared because of the global pandemic and because it originated in China and because their factories or exports were shut down for a number of weeks. But then several months later, they said, I'm making this up, but you know, perhaps they said to themselves, where else in the world could we have stood a supply chain back up this quickly? Like literally in, you know, a matter of, let's say, 6 weeks at the outside, because China did a remarkable job working with industry, working with everybody, smart stimulus measures, smart policy measures to put the supply chain and the manufacturing industries back on their feet and get things moving again as a beginning start to, you know, rebooting the economy. I'm going to pull up there and then respond to anything you wish.
Great, Greg, thank you. And I think you, in the few minutes, really gave us a good sense of the recovery that China has gone through since January and February. You know, you bring up dual circulation, and it seems to me it's a euphemism, or a very convoluted way of saying what you just said. Yes, indigenous innovation, and when we have the chance, we'll use foreign technology and we will be in the international marketplace to our benefit, which is, it's really not that new, but it seems to be what the Chinese policymakers are betting on right now. So thanks for bringing that up. And we will get to questions. We've got a few questions here. We will get to them. But first I want to address Albert. Now, Albert, you and I have known each other for a long time. You've been one of my go-to guys when I'm trying to figure out what's going on in China. So that's whether you're 17 years with GE or now since 2014 as a vice president in GM. So if you can share it with me, I don't know what you're able to share, but if you can share it with me, I'm interested in the market potential you see in China's auto industry, and you've already started to allude to it a bit in the first question. Also, I'd like to know some of the challenges you face in the current bilateral environment. And let me recommend that when you're speaking, get close to your microphone so we can be sure to hear every single word.
Okay, is that okay? Can you hear?
So far, so good.
Okay, I'll get it close to the microphone. First, I think I need to apologize again. I can, you cannot see the video because the company set up a computer like this. So I cannot control. Sorry for that. Regarding the market potential, I just give a first perspective that China right now, the latest data, I was in State Information Center on Friday, last Friday, and the latest data is China has 150 vehicle out of 1,000 people. And this number compared with US is to have 800 vehicles per 1,000 people. That's, you probably see the big potential. And China is not targeting to reach to the same level like US, neither like to approach to European, which is a 600 vehicle out of 1,000. China, they believe when the market come to mature, is probably about 400 people have vehicles out of 1,000. And right now is 150. So you see, you still have double or triple potentials for automobile industry. And right now, the peak of annual sales of automobile vehicle in China is 2017, reached to 29 million vehicle in that year. And then followed a few years slowing down and even declined. And the latest forecast for this year is 25 million, which is, I thought, today. And this means the China market is the largest growing automobile market in the world for the past 9 years. And General Motors sold about 1 million, 14 millions or so. I think that's overall US market, and China is way beyond that. So that's the potential. And the policy for GM is to, we build where we sell once they have volume. So given the large volume in China, our vehicle sold in China is about 99% all made in China through our joint venture. And the parts, we have 95 to 97% of parts sourcing from China. So that means the most of the work, we pretty much rely on China, doing all the work in China. The current US-China relationship does have impact to us, but not very, very big. It's manageable to us. And I observed the Chinese government, compared with few years, if people remember, that when China had problem with Japan, and the public sentiment is so strong that caused the Japanese business basically stopped in China for quite some time and took a long time to recover. Same thing for a couple of years ago when China had a problem with South Korea. And then the South Korean automobile manufacturer even not recovered today. So in this round, during the US-China friction, we observed that Chinese government is very carefully managed the public sentiment. So far, we have not heard a strong, even it's growing, but we have not seen a very strong kind of, anti-American product sentiment. So we do hope the two biggest economy could work together will find a way it's beneficial for both US and for China. If I may stop here.
Okay, Albert, thanks. I was going to mute myself because there's a siren out there, but it's time for me to segue. Thanks very much for that, Albert. Let's see. I guess it's Brent, huh? Now, Brent, you were trained as a software engineer, and I know some of the books you got behind you there are some really wacky stuff about quantum and things that I can only spell. You first ventured out in your career into some small startups before you joined Intel, which is, of course, one of the largest and most successful high-tech companies in the world. Now you're in charge of strategy for China. And what a wonderful time to be in charge of strategy for China. Congratulations.
Yeah.
So the question I've got here, as a U.S.-China high-tech, U.S.-China high-tech competition is really the center or one of the major centers of our competitive relationship. What are the major factors you consider in approaching your job of strategy, and what outcomes are you looking for in this?
Yeah, no, thank you. I mean, when I started this, I had hair, you know, so it kind of shows the level of stress, right? No, I mean, look, you know, countries want to advance, countries want to have technology independence and freedom and so on, right? And that's totally like we, you know, we get that. Intel tends to take a very balanced, long-term philosophy towards strategy, right? And things will come and go in different political spheres. And one of our major objectives is to partner with the various countries and partners in which we operate, you know, regardless of where that is, right? And in a very balanced way. So we operate within the laws and, you know, regulations of every geography we're in, but we also try to look for opportunities to partner with the different geographies to, you know, help them advance where they need to advance, right? And that's a holistic global strategy, very balanced, very, very long term. I mean, my family are sailors. The analogy I use is kind of like the ballast in the storm, right? We try to see ourselves as sort of the root of technology and the sort of foundation of technology. As things may be chaotic, we can't control any of that. We just want to provide that foundation of technology so that all of us, like we're doing right now, can do our lives. Our kids can learn from home and remotely, and we can all work and stay safe and that kind of stuff, right? So we tend to take a very long-term, partnership-oriented approach to business. The last several years definitely have been a realignment, for sure. But we even through that realignment, we tried to help advise both sides on, and multi-sides on kind of what our recommended approaches are to address some of the concerns that the sides may have. For example, cybersecurity. If a particular geography is concerned about cybersecurity, our advice would be help us understand what you're concerned about, and we will help innovate solutions to help technically address what you're concerned about, right? Not some sort of policy thing or whatever. And so we view ourselves as trying to be advisors, trusted advisors to all sides in this, because we don't know, frankly, what the you know, different political factions are debating about. We just don't know. So we try to advise on what we do know, and what we do know is what we do. And so we can advise on where we can help provide solutions in sort of this global trade dispute, or whatever you want to call it, and then therefore help provide some clarity, again, with a very long-term perspective kind of embedded in what we're doing. So that's kind of how we look at this. Like, there's a lot of very short-term chaoticness, things that people can over dwell on. We tend to look at the long-term relationship globally.
Great. Thanks very much, Brent. I know you've got all of you folks over there are working long hours with a lot of stresses, and appreciate you sharing how you're going about it. I'd like to take a question now from the audience. We've got a question about